Good day and welcome to our latest episode of the NL Real Estate Info Show. It's been a while since we've done one, so we got a lot to catch up on. So in today's episode, we're going to recap all of 2017, look at the good, the bad, the ugly for the St. John's real estate market. We're also looking at 2018 and how it's starting and where we see it going. This is going to be a great show. Make sure you tune in and check it out. All right, let's get down to business. We need to talk about 2017. So last year, I think it was late spring, early summer when we stopped sort of doing these real estate shows. We got busy and we were selling homes and we didn't seem to find the time to keep bringing the information. So I do apologize, but so now I'm going to recap all of 2017 so you're up to date. And then in the next segment, I'll talk about how 2018 started. So we got a fresh footing to work forward on, and hopefully I'll keep these coming on a more frequent basis this year. But let's get started with 2017. So quarter one last year, if you remember, that's the winter, January, February, March. It was brutal in terms of weather. We had a lot of snow. It was cold. Winter came early. It ended late. It was just the winter that wouldn't end. Basically the opposite of our winter this year. So, not surprisingly, sales volume was down. Pretty difficult to climb over snowbanks to look at homes. You know, you take homes on larger lots where you have a nice piece of land to look at. You can't see anything. It's all snow covered. That kind of stuff is always sluggish when we have rough winters. So, last year was one of the rougher ones that I remember, and the sales volume was down 14.6% in the St. John's metro area. So when I say St. John's metro area, I'm talking basically St. John's and the surrounding area. So that's Pooch Cove, Flat Rock, Torbay, Logie Bay, Middle Cove, Outer Cove, into the city. Then obviously Portugal Cove, St. Philip's, Paradise, Mount Pearl, CBS right out to Seal Cove. So basically the whole surrounding area. That's a St. John's metro real estate market, and that's what I'm speaking about. So we're down 14.6% in Q1. So then in Q2, which would be April, May, June, it was still really winter, it felt like, for the first couple of months. I mean, if you remember, that was the winter that didn't end. And in addition, there was a lot of uncertainty in the local economy. The budget wasn't released. There was a lot of speculation that there was going to be a lot of job losses, a mega deficit, more taxation people were worried about. So in general, there was a lot of uncertainty, and uncertainty is never a good thing when people, when you're in relation to people making their largest purchase and largest transactions in their life, which is residential real estate. So, that was sort of the low point in the market over the last few years. The quarter two was down 19.6%, so almost 20% down from the previous year, which was a lower year. 2016 was no banner year. That was also in a decline from our peak, of 2008 to 2012. Those years, those five years where things were really hot, and things have been sliding basically since 2013, 2014 started to slide. 2016 got low, and then 2017 will go down as our lowest year. So. And a lot of that happened in the second quarter. I mean, down almost 20% is crazy. Our for the year, before I forget this, is the number of sales were just over 2,200 in the St. John's metro region. That's very low. I mean, we had a lot of years where we were doing about 3,400 sales. So from the peak of the activity in the market, 2017 finished down about 35% in terms of sales transactions. But after June, things started to really turn around. So you had quarter one down almost 15%, quarter two down almost 20% from the previous year, and quarter three we started to see it turn the other way a bit. And then it was only down 2.9%, so just about 3% from the previous year. So much more manageable of a decline than these deep double-digit declines that we saw in the first half of the year. So. Where it gets really interesting as we transition into quarter four, which is generally not an amazing time for real estate. We're talking about, October, November, December. You have Christmas coming, the weather's changing. It's, people are settling in. Quarter four was actually up almost 2%. It was up 1.9%. So we went from being down almost 15 to down almost 20 to sort of coming back close to neutral at down about 3 to actually moving up 2%. So you can see that the dipping point in the market was somewhere in that second quarter, May or June, in my opinion. I would think it would have been I think it would have been May of last year, would have really been the low point, because that's normally one of our top months of the year for volume. And last May just didn't have the zap that we would be expecting. So you could see that moving. And now some of those, there were some factors there. When the budget was released, there wasn't those major job losses. There was no new taxation, implemented. So things didn't get worse financially for people. I'm not saying that things aren't bad for some people, but it didn't get worse with that budget from the province. Also, oil was climbing throughout the year and stabilized, and oil's been stable, and we're seeing investments in the oil industry. We had our big announcement late last year out in Argentia for the work on that gravity base. So there's that was replacing work from Long Harbour as it was starting to shut down, where for a while we weren't certain what those workers were going to do. So there was a trend towards some more stability, and stability is very important for real estate. So a couple of just real key interesting items for 2017 is that, believe it or not, there was more homes that sold in quarter 4, so October, November, December, than in quarter 2, which is April, May, and June. So we actually sold more homes coming into Christmas than we did in our spring market, which is bonkers. That just shows how depleted our market was last spring. Like I said, we had a little over 2,200 sales. That's down about 35% from the peak. And the other thing is, in quarter 4, when the sales activity went up, in St. John's itself, not the St. John's metro region, but this was the only area I really looked at because it has the highest number of sales always. The pricing was on a single-family home in quarter 4 was up 6.1% over 2016. So not only did the sales volume start to move in a positive direction, we actually seen some upward pressure on price, which is the first time in a long time. Now, that doesn't mean the prices are gone back to the peak prices or anything. I don't want to send that message, but there was some recovery. So my opinion, 2017 was our bottom. All this stuff always works in a cycle. The boom years never last, neither do the bust years. And I think 2017 was the bottom. It was the trough of the market. And really the bottom of that was in quarter 2, so May, June. That kind of timing was really the bottom of our market, and since then we've been going into a stabilization mode and actually into some growth. So the people who are looking right now to time the market to buy at the bottom, you've missed it. It was 6 months ago or more. It was the spring of last year, and so right now we are early in the stages of the upward movement of the business cycle. And this stuff takes years. I'm not trying to say that, this is happening overnight or anything, but that's the direction we're finally heading, which is good to see. All right, so let's move right along to 2018. It's been a great start to the year. You can speak to any real estate professional and they'll tell you it's been pretty busy this winter, which is great. And that continues with the theme that we just talked about in 2017, that the market started recovering in the second and stabilizing in the second half of the year and trending somewhat upwards. And that's continued to start 2018. So for January and February in the St. John's metro region, there was 216 sales compared to 198 last year. Well, that's up 9.1%. So to pick up an extra 18 sales in your first couple months, that's significant. But the real story is the sales that have been being written and put in place over the last little while, because it's been very busy. I mean, we've received multiple offers on properties so far this year, which is very interesting to see. Haven't seen that in a while. But last year in March, there were 164 sales for the whole month of March. Well, right now, conditional pending in our system. So these are sales where the home has been sold, the finance letter has been submitted to the listing agent, the home inspection's done and settled away, where it's a firm sale. So these don't count sales where there's an offer that's been accepted, but there's still conditions being met. So these are homes that are sold and the conditions have been met, and now it has been reported to the MLS as a conditional pending sale, just waiting to close. We have 217. And so most times when a home goes conditional pending, it'll close within 30 days, normally. Because, you're spending about 2 weeks or so generally getting firm between the financing and the home inspection and such, and those types of conditions. So usually by the time a sale is reported, within 30 days it's going to close. Now, not all of it, so not all of the 217, but if I just said that all of those 217 were going to close in March, which they won't, but the majority of them will, that's up 32% March would be up 32%. So there's no doubt we're going to show a massive increase in March. So my prediction, Q1 will definitely be up double digits over Q1 last year. So it'll bring us back closer to 2016 because now we're climbing back up the hill. 2017 was the bottom. You know, we're coming down 2016, 2017 was the bottom. Now 2018, we're starting to pull ourselves back up. So I think that the number will be very similar to what the 2016 number was, significantly higher than what the 2017 number was. And so you're probably wondering, well, what's that in relation to the pricing? Well, it's very interesting what's happening. The single-family homes are almost dead even to what they were. The average sale price right now in St. John's Metro for a single family is $300,939, whereas the previous year it was $302,872. That's only 0.6% it's down. So it's down. The pricing on a single family is down, but it's down less than a percentage. The two apartments is where the real story's happening here. So the two apartments are up significantly. Like right now, the average two apartment is $314,825. It's almost $315,000. Whereas last year it was $269,000, $490,000. Like just below $270,000. I mean, that's up 16.8%. We're up almost 17% on pricing on a two apartment. And the real story there, no, not every two apartment is shot up 17%, don't get me wrong. But the activity has gone up significantly. So of our sales, a lot of that growth that we're seeing in our sales has been on the two apartment side. And what I'll notice is that, if I took the median price of and the median is where you basically draw a line right in the middle. So you take the lowest sale, the highest sale, you draw a line right in the middle as opposed to averaging out all the sales. And right now that average is over that median is over 320, and last year it was 270. It's up over 50,000. So basically what has happened is the nicer two apartment homes have been selling again. Whereas last year I feel that it was mostly the rental property two apartments or the smaller square footage and more modest two apartments. And now we've seen the nicer two apartments sell. And I know this to be true. I've listed some stuff so far, and our team's listed some stuff so far this year that it'll be a higher price point two apartment, and it's sold relatively quickly. So I know that the market is there for that. So that's really skewing that number. But it's a good sign that that stuff's coming back. So right now, your single family prices are about the same, it's just down a smidge, and the two apartment average pricing is way up, almost 17%. So those are for St. John's Metro. But the real interesting thing here now is I like to take, when I'm looking at smaller data sets, I'll look at the, if I want to break it down, realistically, the only thing I can look at and make any conclusions from would be St. John's itself, because it's our largest market by far, and so it would give me, we're only looking at 2 months, it'll give me the largest amount of data to work with to draw some conclusions. So St. John's, back onto this two apartment theme, that's where we're seeing the rapid growth. Like right now, the number of two apartment sales in St. John's is up 75% over last year. And the sales prices are up 24%. So once again, a lot of that is the quality of the two apartment that is selling is higher. So basically all those additional sales, the extra 75%, are of the higher price point, nicer, newer two apartments that weren't selling last year. So they're selling now, so it's driving the numbers up. And for single family homes, the average price is up 7.6%, so over 7.5% up, and the number of sales are identical. So bang on. So basically all of our growth that we're seeing so far in the market is on the two apartment side, because that got relatively quiet last year. But like I said, the real interesting thing to me is going to be, how does March play out? I think that's where we're going to see the mega growth and push us up into double-digit numbers. So we'll see if this trend continues with the two apartments, if that keeps being like a hyperactive market. I'm sure the single families will post up in number of sales and continue to be up in the pricing. So, this just sort of reinforces what we seen at the end of 2017, where we saw prices creeping up. So if you recall, the prices in quarter four were up 6% in the city. In quarter four they were up 6%. Well, so far to start this year, they're up 7.5%. So they're moving up. So last year was definitely the bottom for our pricing, the bottom for our activity. And if I'm looking at the conditional pendings and number, that's a very strong number that we see there. That doesn't count all the sales that have happened probably over the last week or 10 days where, the home inspection's being done right now, the finance letter's getting sent over. That stuff's not even reported yet. So we're definitely going to see mega growth. So I'm really looking forward to this time next month, breaking down the first quarter for you and just showing all the growth. But my prediction is that we're going to continue to see this throughout the year. Online activity on our websites are way up. The number of you talk to any mortgage people, the number of pre-approvals that are done are way up. There's somewhat stability in our marketplace now. There's more positive announcements coming through than negative. I know they're looking at a massive play out at the Bull Arm facility. I just saw that yesterday in the news. There's a lot of tech stuff happening here right now. I know that there looks to be a lot of investment with Bitcoin, cryptocurrency kind of investment and stuff for to take advantage of our climate and our energy. So there's positive things happening, and we're such a small market in the grand scheme of things that it doesn't take too much to turn it around. So those who have been waiting for the bottom, you've missed it, in my opinion. You'll see 2018 going up. But historically, 2018 will still be a down year if we go back. It's not, this stuff doesn't increase by the flip of a switch. It's a gradual, just like the come down is gradual, so is the climb back up. So, I do think that 2018 will finish much more on track with, say, 2016, and then hopefully we'll see in future years to climb back up, and we'll get back up to some of the previous levels where, all homeowners who bought in the peak, well, they've recovered all their equity. The sales volume's up, which makes for a vibrant industry, makes for a vibrant construction industry and a good economy. So overall, we're off to a great start. That's the message I want to send. If you have a 2-apartment home and you want to sell it, this is the best I've ever seen in terms of activity for a 2-apartment. So, you really might want to look at that and see about getting that home on the market and capitalizing on that surge that's happening there right now. But hope you found this helpful, and we're looking forward to bringing a lot more of these to you throughout the year. Well, guys, thanks for tuning in. I know it can be sort of long and dragged out, but it's a lot of information to get out. So we really do appreciate your attention. We hope that you find that information valuable. So now you're all up to speed on 2017, how we're starting the year. And if you have any real estate questions at all, call an expert today at Hollett Group, Royal LePage, Atlantic Homestead, because helping you is what we do.